We all know markets had a tough day today. At one point they were down by just over 4%. They've clawed their way back to just under 3% down. This is the weekly chart for the Australian All Ords. Here is today, so it looks pretty horrendous. I've got a couple of bits of advice. The first is, if you can avoid looking at your portfolio, your superannuation, and also your investment portfolio, because it would worry you, please do that. Now, I have some people say that, geez, if I don't look at my portfolio, I won't know when to buy. You'll know when to buy, because guys like me will come on to TikTok and social media and Instagram and tell you how far they're down. Here you go. And of course, there's going to be all over the news that, Australian investors lost X amount of billion. It's like a game I play to guess what that number is. So you can't control it. It's going to be still very much long term. There is lots of uncertainty around, but there is always uncertainty. The amount of, if you look at all the wars over the last 120 years, it's not pretty. Madmen continue to do crazy things. So you cannot control what happens here. The worst thing you could do is sell out at a low, and we are really not at substantial lows. We are not really even in correction, let alone crash territory. The share markets can do far worse than this. But of course, we don't know what's ahead of us. No one does. The one thing that I put my money behind is I put my money behind businesses that continue to work hard to improve their products and services over the long term. And this was what will drive the share price over the long term. The short term will be dictated by investors' fear and greed. So when we go and fuel up your car and you pay an extraordinary amount of money, you have no choice but to do that, as I did on the way home from Melbourne today. But when it comes to looking at my portfolio, my superannuation, I don't have to look. It's very much long term. And even for someone that is aged 60 to 65, there's more than likely that money is going to be invested for the next 20 to 30 years. So even in retirement money is still long term. So please hold firm. This is general advice, of course, but volatility is normal. It's part of the investing landscape. And it's the decisions we make at the most volatile times which matter most. And what that means is, if markets are crashing substantially, it can be an opportunity to buy while it's cheap. So please remember, this is general advice only. If you get a bit of value from my content, please give us a follow, and thank you for listening. Cheers.